Hey guys, welcome to another video. I want to introduce everyone to a company that I just bought shares today. It's a big name company. Most people know it, but it's still a growing company. It has a lot more to offer, a lot more room to run, a lot more room to grow. It's a foreign company, and it seems that we found the perfect entry point today. The last couple days, it has dropped drastically, and in my opinion, I don't think that the reason for the drop is warranted. So I'm seeing this as a great opportunity to get in now, start getting shares, grabbing shares, and as it goes down, you could either grab more and lower your cost basis, or if it keeps going up, then continue to buy shares and average up, because this is definitely a stock that you're going to want to hold for the next couple years. You guessed right. That company is Alibaba. Okay, so here's the catalyst that we're seeing with Alibaba. So, on the one hand, the major drop here, as you can see, look, so this is on Robinhood on the 1 month. Back on December 23rd, they were about 256 a share, and then it dropped all the way to 222, which is currently where it is today. So that's a $30 upside, give or take. Um, the reason for the drop is that Chinese regulators launched an antitrust investigation into this company, and basically the government's looking into them, and there's a chance that they can have their business limited. Um, you can look up the specifics, but in general, basically what happened is when you sign up for Alibaba as a seller, there's a couple different ways that you could do it, such as Amazon FBA. And if you sell one of your products on Alibaba, you're not allowed to sell that product on any other websites like eBay or Amazon or anything like that. And basically, Alibaba had exclusive rights to your product. But there's talk that they're a monopoly and that they don't work well for consumers, and it's not fair that products are only on Alibaba's site. So the government went into a whole investigation. So that's the reason for the big drop. Now, on the other hand, it seems that a lot of U.S. companies are seeing this drop as an opportunity to buy as well. So, for instance, one big headline is that the Ohio Teachers Pension sold all of their shares in Apple and Tesla and used that money to buy shares in Alibaba and GM. Okay, so what do the bulls say about Alibaba? Well, according to Robinhood, the China marketplace has about 711 million active buyers as of December of last year, which totals about half of the Chinese population. So there's a huge runway of user growth in the coming years. Also, Alibaba is like the Amazon for China. So you can see what Amazon did in America and how easy it is to order products and how quickly it gets to you. So now imagine Amazon over in China, where there's a larger population than the US. And China's a growing and emerging market as well. So consumer spend will only be up in the next couple years. So now let's see what the bears have to say. The number one fear that people have with Alibaba is competition. So there's a company in China called JD.com that does a similar business as Alibaba. And you have to worry about Amazon. If Amazon ever decided that they were going to go and enter the Chinese market and really focus, then that would be another big source of competition for Alibaba. Another fear is that Alibaba is starting to branch out to all these different industries and different types of businesses, and they might lose focus on their main core business. Then the final worry that people have, especially U.S. companies, is that they don't trust Chinese companies. There's different uh, examples of Chinese companies in the past that have fudged the numbers, and they've haven't been clear with their business dealings. So there's always a lot of fear when it comes to Chinese companies, and that's the major reason for this giant drop. Okay, so now let's look at Alibaba as far as technical analysis is concerned. So you can see right here, this is the 1 day chart for the year, for the last year for Alibaba. And as you can see, they reached a high about 319, and then that's when everything started to crash down. And this is where we've seen the latest drop. Right now, as the making of this video, we are currently at 236 a share. So it's already hit its peak. It bounced off of 209 area, and it's on its way back up. So in my mind, this is perfect. You can see the high volume from the drop, but now we still have high volume green coming back up. So we're at the bottom of these Bollinger Bands, and we're riding the bottom of the Bollinger Bands, but I think that this is where it should kind of bounce and come back up. So that's on that chart. Now if you look at the RSI, we look like we're very, very oversold down here. See, we hit 23 on the RSI. That's basically the lowest it's been all year, and looks like we're coming back up now. So I think that this is a great value. Once, if we look down here at the MACD, all the momentum has been going down, but it looks like it's starting to come back up a little bit. So I think that we found the bottom, and you never really know, but I'd like to think that we found the bottom. So I would be very, very comfortable, and I have been scooping up shares very aggressively right now. Okay, so let's talk about price targets for Alibaba. There hasn't been any new price targets as of late. The last one that I could find was in early November by Barclays. They called it a buy at 365 a share. So being that it's right now around the 236 area, obviously this early November call out by Barclays was before everything that came to light with Alibaba and the competition of merchants, and how then it led to the huge drop. So obviously this is not all factored in, but before that they were saying about $365 a share. So right there you're looking at $130 per share that you could potentially see if you were to buy shares at this point. My analysis is I think it's a great deal. I think Alibaba's not going away. It's only going to keep growing. It's going to beat this. I read somewhere that if there's a crackdown on them and the merchants and everything settles, that the potential loss of business is only going to be like less than 1% of Alibaba's total sales. So this is just, I think the drop is unwarranted. I don't think it should have fell this much this fast or at all, and it's going to bounce right back. So I'm adding to my portfolio aggressively. I'm adding as many shares as possible, and I'll continue to add whether or not it goes down or comes back up. I will average down, I will average up, but I'm going to continue to add shares of Alibaba at least until it gets back up into the 300s. So that's my analysis. I don't know what you guys think. Let me know in the comments. I appreciate everyone who made it this far into the video. If you could, please like, please subscribe. I'm trying to grow the YouTube channel. I'm looking for my first 100 subscribers, so please give me a quick follow. It's free. Help me out. Help me to create more videos in the future. And if you have any suggestions or videos that you're looking for or any questions, just leave them in the comments. I'll read them. I'll answer them. And thanks to everyone.